Trilogy Metals, trading under the ticker TMQ, is currently priced at $2.09, reflecting a modest intraday gain of 0.48%. While that fractional movement might seem uneventful on the surface, it masks a seismic shift that just occurred, fundamentally altering the entire investment thesis for this company. The expectation for years was a slow, arduous, and uncertain path toward developing its Alaskan mineral assets, a narrative defined by regulatory hurdles and capital constraints. The reality, delivered just yesterday, is a direct strategic investment from the United States federal government, coupled with a presidential directive to fast-track the permits for its long-stalled Ambler Access Project. This isn't just a minor catalyst, it's a foundational change that pulls the company's future timeline from a distant abstraction into the immediate present. For too long, the market has viewed Trilogy as a high-risk, speculative bet on the future of copper and other base metals, a company whose fate was entangled in a web of environmental reviews and political whims. Investors, whether using platforms like Fidelity, SoFi Invest, or Interactive Brokers, have largely categorized TMQ as a long-shot play, a name you might add to a diversified portfolio but not one you'd build a core position around. The prevailing belief was that the Ambler mining district, despite its world-class deposits, was effectively landlocked, its immense value trapped behind a wall of bureaucratic red tape. The challenge for investors was reconciling the sheer scale of the resource, billions of pounds of copper and zinc, with the seemingly insurmountable logistical and political barriers. This created a persistent drag on the stock, keeping it range-bound and highly sensitive to any negative news flow regarding the permitting process. This expectation of a perpetual struggle has been shattered. The reality is that the federal government, in a move to secure domestic supply chains for critical minerals, has not only vocally supported the project, but has also become a significant shareholder. This fundamentally de-risks the project in a way that no amount of positive geological data ever could. The immediate market reaction has been telling. Yesterday's trading session saw an explosion in volume, far exceeding the stock's daily average. We witnessed a surge as the news broke, with the price hitting an intraday high of $2.21 before settling back to its current level. This type of price action, a sharp spike followed by a partial retracement, is classic for a stock absorbing a major, unexpected news event. Early movers, likely institutional desks and algorithmic traders reacting to the headlines, drove the initial buying frenzy. Now, the market is entering a period of price discovery, as a wider pool of investors, from those managing individual brokerage accounts to those utilizing Schwab Intelligent portfolios, digest the long-term implications. The critical question now is not if the Ambler Road will be built, but how quickly and what the project's economics look like in this new accelerated reality. The government's investment provides not only capital, but also an implicit guarantee of support, a powerful signal to the rest of the market. This shift has turned what was once a binary risk, permit denial, into a question of execution and timeline. Delving deeper into the company itself, Trilogy Metals is a base metals exploration and development company focused entirely on its assets in the Ambler mining district of northwestern Alaska. Its primary assets are held in a 50-50 joint venture with South 32, called Ambler Metals. The two flagship projects are the Arctic and Bornite deposits. The Arctic deposit is one of the highest-grade known copper, zinc, lead, silver, gold, volcanic massive sulfide deposits in the world. The Bornite deposit is a high-grade copper-cobalt resource. The business model is straightforward: to prove up these resources, secure the necessary permits to build and operate mines, and eventually produce the metals that are critical for everything from electric vehicles and renewable energy infrastructure to everyday electronics. Before this week's news, the company's progress was measured in geological reports, preliminary economic assessments, and incremental steps through the labyrinthine permitting process. Their financial statements reflected this pre-production status, showing consistent net losses as the company expended capital on exploration, engineering, and administrative costs without any offsetting revenue. This is standard for a development stage miner, but it always kept a certain segment of investors on the sidelines, waiting for a more concrete path to cash flow. That path has now been cleared. The recent third-quarter financial results, reported at the end of September, were largely in line with expectations for a company at this stage, showing a net loss per share consistent with previous periods. However, financial reports are, by their nature, a look at the past. The investment world, particularly for a stock like this, is now entirely focused on the future. The government's $35.6 million investment is a significant cash injection that will bolster the company's balance sheet and allow it to aggressively advance its development plans. This reduces the near-term risk of share dilution through secondary offerings, which is a constant concern for investors in junior mining companies. Looking at the ownership structure, there is already significant insider and institutional ownership, with major resource-focused funds holding large positions. This new government stake adds another layer of institutional validation. It's one thing for a hedge fund to see value, it's another entirely for the federal government to become a partner, citing national security and economic prosperity as its rationale. This move is likely to attract a new class of investors who were previously wary of the political risk. Platforms like Robinhood, which have brought a new generation into online investing, may see interest in TMQ as the story shifts from a complex permitting battle to a more straightforward narrative of building and producing American resources. Looking ahead, the future outlook has been completely reshaped. The primary risk has shifted from the political to the operational. The company and its partner, South32, must now execute on the engineering, construction, and community engagement plans for both the access road and the eventual mining operations. While the presidential directive clears the major federal hurdles, there will still be detailed work to be done on the ground. However, the momentum is now firmly in the company's favor. The macroeconomic backdrop is also incredibly supportive. The global push toward decarbonization is creating unprecedented demand for copper. It is a key component in wind turbines, solar panels, and the entire electric vehicle ecosystem. Analysts project a significant supply deficit for copper in the coming years, which should provide a strong tailwind for prices. Trilogy is sitting on one of the largest undeveloped copper resources in a top-tier, politically stable jurisdiction, at a time when the world is waking up to the critical importance of this metal. Before you make any investment decisions, I want to hear from you. Comment below what percentage of your portfolio you allocate to the basic materials sector. Do you see more upside in industrial metals like copper or precious metals right now? The risks, of course, have not been entirely eliminated. The construction of a 211-mile road in a remote part of Alaska is a massive undertaking with inherent logistical and engineering challenges. There could be unforeseen delays or cost overruns. Furthermore, while the federal approval is a major victory, the project has faced opposition from environmental groups, and further legal challenges, though now less likely to succeed, are still possible. Investors should also remain mindful of commodity price fluctuations. While the long-term outlook for copper is bullish, short-term price volatility is a given in the metals market. A sharp downturn in the global economy could temporarily dampen demand and impact project economics. Those engaged in self-investing need to weigh these operational and market risks against the significantly improved political and financial landscape. An intelligent portfolio would still consider TMQ a higher-risk, higher-reward asset, but the probability of that reward has increased dramatically. In conclusion, the story of Trilogy Metals has fundamentally changed in the last 48 hours. The market's long-held expectation of a protracted and uncertain permitting battle has been upset by the reality of direct federal intervention and investment. What was a speculative play on a locked-up asset has transformed into a de-risked development story with a clear path forward backed by the full weight of the U.S. government. The focus now shifts from if to when. The intraday stock movement, while seemingly minor, represents the market's initial attempt to price in this new paradigm. The heavy trading volume indicates that a major reevaluation is underway, as investors across all platforms, from Fidelity Investments to Interactive Brokers, recognize that the ground has permanently shifted beneath Trilogy Metals. The company is now positioned not just as a miner, but as a strategic asset in the nation's push for resource independence. The expectation was a long winter of waiting. The reality is the start of a new season of building. If you found this helpful, don't forget to like and comment your thoughts. Let's discuss. Disclaimer: this is not financial advice. Please do your own research before making any investment decisions. Trading involves risk, and you could lose money.